All right, guys, welcome to another weekly market reviews session. Okay, let's get straight into it. Okay, so again, this is not financial advice, it's just our own opinions, references, or assertions that we may set out on our social media. Okay, so let's check out the chart, see how we are doing. Again, right, I already signaled to you or to all of you about how the markets will be for the first week and a half of August. Okay, we are already coming to middle of August. We have seen a pullback in the markets. So let's get into it. Let me show you guys where exactly there are some levels you want to pay attention to. And even if you're looking to invest or start trading, there are some things that you can start pursuing for yourself. Okay, so again, firstly, what are we looking at? So we are on the S&P 500 Seasonality Index. And like I told all of you, first 2 weeks of August, market tends to drop and it tends to go sideways. Okay, the month of September is normally not, August and September are normally pullback months. They are not too great. And you can see, what do we have here? Our SPY chart, S&P 500, we have had a pullback. Okay, and I told all of you about this outside bar or bearish engulfing. Typically, when it happens, there tends to be a pullback on the markets. Okay, last time it happened, which was down here. Okay, you can see there's a pullback down here as well, pullback for itself down here as well, major pullback. Okay, so every time it happens, there is a major pullback or at least some sort of pullback in the markets. So markets are coming down in terms of its prices right now. So I'm glad that we have caught that. I even drew a line for you to tell you where it might come to. So this blue line that I drew, you can see nicely SPY last week closed at around this line, my 445 to 442 levels. Okay, 442 to 445 levels. I believe in my previous video and the video before as well, I already highlighted these levels. It has finally come to pass. It has decided to try and close the gap over here that you see on the S&P 500. So we already called this out for those of you that stayed on the sidelines, waited for this pullback to happen, or even if you did some short trades, okay, some short-term trades to short the market, I believe that would have paid off handsomely for your portfolio. Okay, now let's get into the tech stocks first because number one, I believe QQQ, the Nasdaq 100 pulled back a lot more. Okay, and the second thing is that generally tech stocks were the one that led the rally for the markets flying up recently. So I want to just have a look at that first. So number one, you can see that we have a massive or good movement up since about March, okay, with the market, since about March for the markets. And the next thing is that we've had it pull back. Now, if I turn on my 50, 100, and 200 EMA, you can very clearly see QQQ pull back, okay? And it pulled back a bit more than our S&P 500. Reason being, like I mentioned, tech stocks were the one leading the rally. And two, Nasdaq 100 being made out of tech stocks tends to be more growth-orientated companies. So when they pull back, they do pull back a little bit more. So you can see very nicely sitting on your 50 MA here. For those of you who want a dollar cost average, I'm talking to those people who are doing investing. Okay, what is investing? Investing is for the next 10 to 20 years for yourself. Those of you who are doing investing, growing your money, growing your assets, you can, this is a good level, okay, if you want to start your dollar cost averaging. Okay, so if you want to start dollar cost averaging, start buying a bit of shares of the Nasdaq 100, this is a good level to add a little bit. Okay, now don't go so crazy. Please don't go and add everything at one shot. Okay, the markets may pull back more here. It may also go up. Okay, now where am I leaning towards to? I think in the short term, okay, short term, what do I mean by short term? Couple of days, couple of weeks, we may see a bit more of a pullback in the markets. But in the midterm, in the long term, that means in the next couple of months, okay, next couple of years, okay, I am bullish on the market, because I told you we are back to a bull market in the stock market right now. Okay, so back down to the 50 MA, you can see as of where we closed last week, we are already under that 50 MA. So if those of you who want a dollar cost average, I would say please start doing a little bit of dollar cost averaging. Just don't go in with your whole tranche of capital outlay. Okay, just use a small bit to start your dollar cost averaging. Okay, now how far can we go in terms of this pullback? If I look at my, or I draw my FIBO, okay, so I take out my FIBO and I draw my FIBO from here all the way to the very peak that it reached, which is about here. Okay, you can see that right now markets are pulling back, and we are pulling back close to the 23.6 level, which is around 363. Okay, we are reaching there. Now, a healthy amount or a good amount that you can go down to is as close or as low as to the 50% level. I think going down to the 50% level is healthy before it starts to go back up. Okay, so in the short term, like I mentioned, I am still bearish. Where are the levels we can possibly head down to? Again, on my FIBO levels, it's my 38.2 levels and my 336.24, which is my 0.5, my 50% level. Okay, so this is how much more I think possibly it may pull back. Okay, now if I zoom in a little bit more, okay, so let me turn on my 50 MA, my 100, my 200. Okay, and I zoom into my hourly charts. Okay, you can see, let me just take out the 100, 200. So if I just leave my 50 MA on, okay, if I zoom into my hourly charts, you can see very nicely, again, on Wednesday, National Day, we had a hit here, and it bounced back up. Then it came, oh wait, sorry about that, okay. All right, so bounce here, went up a little bit, bounce back down here, went up a little bit, and then came back down, tested, and broke its 50 EMA. Okay, so the MA levels are a form of support levels for us. Okay, and most people think that the more times a price tests a support level, it gets stronger. That is completely untrue. Okay, it's false. The more times prices test a support level, it actually gets weaker. Okay, so you can see prices came here, bounced once, bounced twice, bounced a third time, and it went down below our MA level. So for QQQ or the markets right now in general, I do see weakness still here. Okay, I do still see weakness. Reason being, if you compare this back to the start of March, okay, the start of March over here, from the very beginning of March that led this entire rally, you can see we have obeyed the 50 MA. We've stayed above these levels. We have not gone below it. Okay, we have, as low as we have come is around this point here. Okay, and even here, but we have obeyed above these levels. We've never come down to test and touch. But now that we have touched 3 times and we ended up moving down. All right, so I do see weakness in the market still, and we can go down further from here. Now, how much lower can we go down to? Very simple. I think if I draw my trend line horizontally, you can start to see. Okay, probably around here first. Okay, so again, around the 364 level, I do see one level that's around here. And if it does break my 364.38, so this is the first level I would focus on, everybody, 364.38. If it does break this, because for the short term, I am still a little bit, I am leaning towards more bearishness. Mid-term, long-term, still bullish, but short-term, bearish, okay? Markets, like I mentioned, they are not going to crash and fall and burn, okay? That is long gone. Now we are expecting pullbacks and corrections. Okay, so if it does break 364, next level I can see is this 357.49. Okay, so again, if it breaks this level of 364.38, it can go down further to the 357.49. All right, now Beyond that, where can it go? Again, further down. Okay. So further down to the 352 levels, and then again, roughly around the 348 levels. Okay, so this is where I see the levels where I think it can possibly go. Okay, so this is for the QQQ. Now, SPY. Okay, so I look at the SPY. Okay, the S&P 500. Now again, S&P 500 is been more stronger than your QQQ. Like I mentioned, reason being because tech stocks led the rally, so now they are pulling back more, and QQQ tends to be more growth orientated. Okay. If you look at your SPY, it has not touched my 50 MA yet. It is resting on the line that I've drawn. Okay. So where, for those of you who want a dollar cost average or want to do long-term investing, should you invest or start to dollar cost average when it comes down to your 50 MA, which is around the 442.5 levels, right? Once the price hits about 442 level, you can start your dollar cost averaging. Now, again, please don't go so crazy and pummel in all your money. Just put in or go in with your first tranche or first capital outlay. Okay. Now, again, will I be doing any long trades? No. I still believe the short-term bearishness. I will wait for proper reversal in the markets, okay, before I go in for any swing long trades for myself. Okay. Now, for those of you who are doing position trades, so what's position trades? Position trades, very simply, is trades. Okay, position trades are very simply trades, okay, that you can buy stocks and hold them for the longer term. You are using them for trading purpose. That means you intend to sell them within the next 3 months, 6 months, 9 months, 1 year, okay? They are not for your investment, right? You're not going to hold them for 10, 20 years. You're going to just use these stocks for your trading mechanism for 3 months, 6 months, 9 months, 12 months. Those of you who want to do position trading, okay? Again, this will be the first levels you can add for the SPY as well. Okay, and as it drops more, you can average down your position so that when the markets do come back up, okay, you will have healthy levels. It will go up to new highs as well, and your position trades will be fairly profitable as well. Okay, those of you who are looking to do swing trades and you're doing things like options as well, wait for proper reversals in the market, wait for proper clear indications before you go in for your swing long trades. Position trades, long-term investing can start to add in at these points. Okay, now back to QQQ. Where do I think it needs to go before there is a proper reversal? Okay, I think QQQ will be excellent for me to show all of you this. Okay, now where do I think or how will I acknowledge that there is a proper reversal? Number one, okay, let me draw a horizontal line down. Okay, so right now you can see that our QQQ is on a downtrend. Okay, on a downtrend. So for it to have a reversal, how will I signal this? Number one, okay, break above my trend line, which is here. Okay, so this yellow trend line needs to go above it. And number two, it needs to break my 50 MA levels. Because why? When a support level is broken, it now turns into a resistance. So two things that need to happen: break 50 MA. Number two, break trend line. Okay, that I've drawn. So I encourage all of you, go and draw this trend line on your hourly chart for QQQ, and you'll be very clearly see the levels. So if it breaks my trend line, break my 50 MA, then we have a healthy, I would say, reversal. Okay. Number three, after it breaks these two things, needs to hold for at least about 2 days. Right? So you hold about 2 days above, then you have a clear sign that you have a proper reversal. Okay. So this is for your QQQ, and when this comes back up, then I'll say the markets are back in a reversal and going back up. Okay, now next thing, SPYG. So those of you with smaller accounts, smaller portfolios, okay, SPYG, this is S&P 500 growth stocks. Okay, growth stocks, they have already hit the 50 MA. So you can see down here from March, okay, below our 50 MA, it stayed above. When it went above, it stayed above the 50 MA, and now it has come down, it is touching. So this is S&P 500 growth stocks. Those of you who have smaller portfolios as well, one ETF to consider for yourself. Okay, one ETF to consider for yourself. Again, at a very nice level, dollar cost averaging for longer term investments. I believe you can start here already, only about $60 per share. Okay, so for those of you who want to get into ETF investing or investing for the next 10-20 years, feel like your portfolio is a bit too big, a bit too small. You can't buy SPY, you can't buy QQQ, you can't buy VTI, Vanguard Total Stock Market Index, you can't buy VOO as well. This is something you can start off with. Okay, so the S&P 500 growth stock, SPYG, currently at about $60, a good way for you to start off. All right, now this is for the investing. Okay, so let's look at Forex Factory. Again, any high impact events for the week. I just got to filter out. Okay, so you have core retail sales data coming out at 8:30 p.m. Again, this is before market opens. Now, Thursday, 2 a.m., this is the one you got to pay attention to. And Thursday, 8:30 p.m., unemployment claims, okay, and FOMC meeting minutes. So this will cause some volatility. What is it? Is because FOMC has already happened, but typically they release the meeting minutes. And the meeting minutes basically just tell you what happened or a report or what happened during FOMC, but they go into a greater detail. Okay, certain things that were not discussed or that they go into greater detail is actually explained in this meeting minutes. So when this gets released, sometimes because of the details that are released, because now investors get a better clarity of what exactly was meant, they tend to get a bit spooked, or it can cause volatility. Okay, so I've seen this report actually cause volatility in the markets because of the greater detail or length they go to. So just be aware of this happening at 2 a.m. May cause some volatility in the markets. Okay, other than that, nothing to watch out for. Okay, but this will be a pivotal factor because if I go on the SPY and I look at the hourly chart, I think when FOMC was released, okay, let me just go through. Okay, so if we go and check back, I think FOMC was released on about the 8th or 9th. CPI data. Okay, so FOMC was on the 27th and CPI data came out last week. All right, on the 10th. Okay, yep. All right, so again, CPI data because of the came out on the 10th. So you can see over here very nicely, tried to go up, then it popped back down. Okay, pop back down for itself. Okay, and then also for FOMC, you can see down here, this movement is entirely FOMC driven. Okay, this move down here as well. So typically when these minutes happen, it's a catalyst. Okay, the pullback is already here, it's going to happen. But what is the catalyst that will lead it to come down some more? This could be one of the catalysts. Okay, so just pay attention towards this. Okay, so that's it for this week's video. I've given you how the markets are in terms of where we stand on a macro perspective. What are some things you can already start to dollar cost average into position trade. And again, if you're doing swing trades, please wait for those proper reversals and when markets actually reverse back up for you to enter your trades. Okay, so with that, take care, stay safe, have a safe trading week ahead, and I will see you next week. Okay, take care and cheers.